Okay, fam, welcome back. So today we're going to be going over the buy, sells, and dividends for the week of October 20th through October 26th of 2024. So with that being said, let's get it. All right, so it is October or Uptober, as is known in the crypto markets. And just so you guys know, Bitcoin, and again, we just did a Bitcoin video, but Bitcoin is currently green on the month of October. So it turns out that maybe that 4-month on the monthly returns on Bitcoin that we showed you guys is actually going to come true, where they're all green: September, October, November, December. But as of right now, October is still green. I suspect it's going to be even more green by the close of the month. So just wanted to point that out to you guys at the start of the video. So let's go ahead and get into it. So the first thing I want to go over here is the M1 Finance video. M1 Finance portfolio. So in terms of dividends we received here, we did get basically 1 cent from PSEC. Eventually we'll get back into this position. But again, the M1 Finance portfolio at this time is not really a top priority. So we would eventually like to get all of these positions you guys are seeing here, maybe with the exception of USOI, to a point to where they're all paying at least $30 a month. So $30 a month from PSEC, $30 a month from EFC, RA, and APLY. APLY is a relatively stable yield max ETF. It hasn't had a whole lot of NAV erosion, fortunately, so some of them do have that quality. For your less volatile stocks, Apple is not really very volatile for a stock compared to something like Tesla. So in any case, we got 1 cent here from PSEC, 13 cents from EFC, 7.62 from RA, 73 cents from Apple, and $4.09 from USOI. So we did actually sell out of one position this last week, and that was QYLD. We will eventually buy it back. We just wanted to get out of that and move that into another position, which I'm going to show you guys right now. So the total for that is $12.58. Again, at some point, this M1 Finance portfolio is going to be much larger. It's probably going to produce hundreds, if not thousands, per month in passive income. So I will show you guys the trade here, and then I will actually go to the positions themselves so you can see it. So the trading took place on the 21st, which was earlier in the previous week. We basically sold out of QYLD for a profit, not a loss. Okay, we always want to sell out of these for a profit. Any money is better than no money, right? So sold out of them for profit, moved pretty much all of that money into PDI, as you guys can see here, a monthly paying dividend ETF of sorts. All right, so I'm going to go over here to the portfolio itself. Going into what used to be our kind of more speculative future tech play portfolio, which has now become a dividend portfolio. So PDI, the PIMCO Dynamic Income Fund, we have added to this position when it was down. Again, it's not down a lot, but the technicals basically say that what's currently serving as a resistance is likely to break out and become new support based on what the charts say. So we decided to add that money to this. So average cost 2057, 117.54 shares. And if I actually give you guys kind of an estimation of what that income would be like right now. Again, we do want to get all of these positions, PDI in this case, to $50 a month, but all of them pretty much anywhere between $30 to $50 a month in terms of paying dividends. So we do the share count times the actual payment per dividend, which is just over 22 cents. Currently sitting at about $26 a month, so that's pretty good. All right, so now I'm going to go over to the Grayscale Trust. You guys can see nothing here has changed. Again, we made, I don't know how many thousands or tens of thousands of dollars back during kind of the I would refer to it as the mid-cycle peak. Because again, we did have one of those in between 2013 and 2014. There was a mid-cycle correction. Between 2021, there was a mid-cycle correction before the final top, and in my opinion, the last 6 months of consolidation that we saw in Bitcoin is the mid-cycle correction. Okay, we're likely not going to see one going forward. I could be wrong about this, but I'm pretty confident about this. because 3 out of the last 4 crypto bull runs have had a mid-cycle correction for Bitcoin, and we likely did just see one, except this time it was a pullback in time, not a pullback in price. Okay. So even if we don't make anything going forward with these trusts, you guys are probably going to make a ton of money, and we will still probably be profitable on these. But the positions have not changed. We basically are just sitting on them. We have not bought any or sold any. We may still buy some before the bull run kicks off, but as I've said before, the window is closing, in my opinion, on the time to accumulate crypto. It's coming to a head, and prices are going to start getting much more expensive here in the following months. All right, so with that being said, I'm now going to go over to the native crypto portfolio so you guys can see the positions. We still have them. So we got Filecoin, AIOZ, Dash, Horizon, Banker, Render, Kronos, or also known as Crypto.com, Ethereum, Scale, Wrapped Luna. Not sure if we'll ever be able to get rid of that one or if it'll be in profit. We'll have to wait and see. Engine and Litecoin. We also do have some Ethereum off in cold storage, and we have some Algorand as well. We do have some other tokens. I don't remember what they are. I'll have to go back and look, but we will be adding to these in the coming months, just so you all know. Okay, so let's see here. Webull. So this one, we just have the one position ORC. We're eventually going to get this position out of here at a profit, ideally, or pretty close to break even. No dividends as of right now. Position still the same, 84 shares at 15.18. The share price currently is 10.33, so it's down roughly about 50%. But these things can always recover. As the Fed cuts rates, people will become more speculative in the markets. That's just kind of the nature of cheap money. That's the way it works. And we are going back into cheap money. The Fed's not going to be like, oh yeah, we're not going to raise rates this month, guys. I highly doubt they're going to do that. Okay. I cannot find a time in recorded history over the Fed's since the Fed's inception where they've ever cut rates and not just continuously cut month after month, meeting after meeting. Okay. I've never seen like a cut and then a pause or anything like that. I know they did the pauses during the rate hikes, but that's a different story. Okay. So no income from this. In terms of the actual profits that we made, so we made profit on QYLD, $3.58, TSLP, $57.82. So I'm going to go ahead and give you guys that now. So that's $61.40. In terms of the sells that we did the QYLD. Already showed you that. So the buys that we made this week, we did actually buy some dividend paying ETFs this week. So we bought some at XDTE, GPIQ, which is the Goldman Sachs NASDAQ ETF, TSLP, and SPYT. Of course, we bought GPIC and XDTE on the dip. TSLP was basically a repositioning trade. We took a little bit of profit off the top of that and moved it into SPYT, and then just repositioned about 95% back into TSLP, like we showed you guys in the strategy on this channel. So okay, so going over all those, now we're going to go into Robinhood, and I will let you guys know right now the payments that we received in terms of dividends. TSLP $34.48, AIPI $147.73, YMAG $13.18, FEPI 107.86, QDTE $23.39, YMAX $61.79, and XDTE is $19.73. So those dividends come out to, let's see, a total of $408.16 here. So in terms of the options premiums, so we started out doing a cash secured put last week on MSTU. As you guys know, that is a 2x leverage MicroStrategy. MicroStrategy by itself is extremely volatile. Okay, it is extreme in terms of volatility. It's actually probably much more volatile than Coinbase. Okay, we're talking like the cream of the crop in terms of volatility here. Okay, this thing is no joke. Then you put a 2x leverage on top of that, you can understand just how, I'm not going to say risky this position is, but this MSTU, we're very strategic in our approach on this position. Okay, we put the put in place with the expectation that because it's Q4, the halving year of the bull run, Bitcoin and MicroStrategy are going to go up, which is the opposite direction of the put, which means that the the value of the put will decay. We'll get to keep all that premium and buy it back for pennies on the dollar. Okay. Trust me, if we didn't have a strategy behind this, we would not be doing it because it's so volatile. So $1,000 times one contract on that. Soxel, which is the semiconductor ETF. So 1021 cash secured put, exit date on that one would have been 1025. We basically did the weekend theta decay thing. So $67 times one contract, and we closed for $4. So bought back for a little bit more than, looks like probably roughly about a 90% gain. Then again, on Friday, we did another CSP on Soxel, one contract. And the closing date is going to be the 1st of November. So that's $93 times one contract. So total options premiums for the week, $1,156. And the total estimated, or the total income actually for the week is $1,638.14. Okay, so I'm actually going to show you guys the actual transactions on the premium or the options first, and we'll go into the dividend paying stuff. So you can see the transactions here. Okay, the first Soxel, CSP, and then the second one here. Going over to MSTU. Here is the put. You guys can see $1,000 times one contract. We could have gotten actually more premium for this, but we wanted to be relatively conservative with the delta. So I think we put on like a 20 delta or something like that, 25 delta. Because again, this is basically 2x the most volatile stock on the entire stock market. So we have to be kind of a little bit strategic and careful with this one. So there's that. And I expect probably at market open tomorrow, MSTU probably will be higher, would be my guess. Soxel will probably also be higher. And MSTU likely probably will have, because of the weekend theta decay, will have likely eaten away at probably about $200, maybe $300 of this cost. So this will probably end up saying something like $250 or something like that at market open. Okay, so let's go ahead and take a look at the buys. So I'm going to start with the XDTE. Okay, so there's our average cost, total share count, 8250. We just added not that much, just like maybe a handful of shares or something. So go over here to the show more. So you guys can see we added 1.89 shares on the 21st, 1.91 shares on the 23rd. And then, of course, the dividend after that. Okay, so going back down here again, all the way down to the bottom. So we still have our one share of GPIX. The S&P hasn't really pulled back like the NASDAQ has, so we have decided to hold off on that one, but we bought kind of a few shares on the dip here on GPIC. You guys can kind of see the dip right here on the 23rd, so that's where we bought our shares at. Or sorry, no, we didn't buy them on the 21st, what am I saying? So we bought them back here during this dip, but of course there was another dip. Probably could have bought that one too, but we didn't. But regardless, our share price is pretty cheap compared to the current price. So we got our two shares here on the 21st. Okay, so here's TSLP. We're probably going to wait to buy more on this one until we actually get a pullback. Again, Tesla went up 20-something percent. I'm not saying it can't go higher, but you can be sure after a move like that, there probably will be some consolidation or maybe some kind of slight pullback. It's inevitable. That's just the way markets work. Okay, so let's see, TSLP here. So we got the dividend here, as you guys can see, sold out of the 70 shares at a profit, and then, of course, bought back higher price, but a reduced position. So that covers TSLP. SPYT, again, we added to this one because eventually we would like to have 300 shares, which eventually will pay $100 a month. So we added this one on the dip as well. So 150.04 shares at $20.11. And you guys can see we added 5.97 shares here on the 25th and another 6 shares also on the 25th. Okay, so we showed you guys the dividends for, I believe it was XDTE. So we'll go over QDTE now. And we could add more on QDTE since it is still cheap, but again, we're pretty much at a point where we're getting over $100 a month, so we want to get some other positions filled first. So 23.39 there. Next one we got is WiMAX. This one, for some reason, I don't know why it had an extremely small payment this last week, but that's fine. More to go towards the actual price itself. Was it? No, sorry, WiMag, not WiMAX. My bad. I'm getting the two confused. So this one did have a big payment. So WiMAX, $61.79. It was WiMag that had a small payment. I suppose maybe it's because the markets have been chopping around a little bit because of the uncertainty of elections. That could be it. Again, when the volatility is reduced, the payment's not going to be as high for something like options. So here's WiMag, $13.18. Okay, so the next ones we got here, of course, is FEPI and AIPI. FEPI is still actually quite cheap compared to our cost basis, but we haven't added any on the dip yet, so not really too worried about it. I mean, all of these underlying companies will go up with time. So $107.86. And the next one here, AIPI. This one we did add on the dip at some point, so we have that 100 shares now. So this one, as of right now, $147.73. So that's everything in a nutshell for this week. So what I will say going into the conclusion here is that our ultimate goal is to basically eventually get to $10,000 to $20,000 a month in total passive income. It doesn't matter whether it's only dividends, only options, or a combination of the both, or including things like day trading and swing trading in there. So both passive and active income. The ultimate goal is to eventually get to between $10,000 to $20,000 a month at a minimum. Reason being is simply put because we can live anywhere in the world, do anything we want to, whenever we want to, don't have to answer to a boss, don't have to go do whatever society expects us to do. Okay, we're free to do as we please. We may not be able to have the most expensive presidential suite every single night, living in luxury, those things that cost like $50,000 a night every single night of the week, but that's not the point. Okay, it opens the world, the entire world, and every place that you could possibly live or do things in, the vast majority of it up to us with that 5-figure income. So, and again, crypto is just another stepping stone to get to that point. We like crypto. We are invested in crypto, but we understand how the markets work. Crypto is kind of its own beast. Okay. So we understand in depth how this separate market known as crypto operates independently of stocks. Okay. And we strategically plan accordingly to take advantage of those opportunities when they present themselves, which are pretty rare. Again, the best opportunity to get into crypto is during the bear market lows, but we're not at that point. Okay. But again, the window to, in my opinion, this is the last thing I'll say. The opportunity to accumulate, in my opinion, is closing, and it's closing fast. And likely crypto is going to be continuing to climb higher from here. And eventually, at some point, we'll get a peak and people will take profit. Because I can tell you right now, if retail doesn't take profit, the whales are going to do it and the institutions are going to do it. And it doesn't matter what they tell you, they got to make money. Okay. Everybody that's in crypto has got to make money. So, anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.